Hello and welcome to BQ Prime. You're watching IPO Adda, and the company focus today is Zaggle Prepaid Ocean Services. It's a company which is into the prepaid services and spend management business. We have the company which is opening its IPO on September 14th, closing on 18th of September. Price between 156 to 164 a piece. The shares has a fresh issue of 392 crores, OFS of 171 crores, and at the upper end of the price band, it's valued at close to 1,650 crores. And joining me today is Mr. Avinash Ramesh Godkhindi, who is the Managing Director and CEO, and Mr. Raj P. Narayanam, who is the Executive Chairman of the company. Gentlemen, thank you very much for joining us on BQ Prime. Let me begin with you, Avinash. You're raising roughly 392 odd crores. What is the purpose and object of the issue?
Thank you for having us here. Appreciate it. The purpose of the raise, objects of issue, it's split into three parts. One is customer retention and acquisition, which is about 300 crores. We are investing in building our tech platform because tech requires continuous investments, and that's about 40 crores. And we are retiring some debt, which is about 18 odd crores, and then the rest would be GCP.
Raj, give me a sense of the business model, because Avinash spoke about that you on customer acquisition and retention, you're spending 300 odd crores from the fresh issue. So give me a perspective on the business model that you have, how you acquire customers and how you go about doing the business.
Sure. So, but before that, I would like to thank you for this opportunity. So to explain our business very simply, okay, so we are a SaaS fintech company. At the intersection of SaaS and fintech is, all our solutions which have been built. When I say SaaS and fintech, basically, we give our platform to companies who will use the platform, to onboard the users of those companies, and then they will transact using a payment instrument. So that is what is SaaS and fintech, and our basic model is that we charge per user in the platform, and then on the transaction we earn something called as interchange. This is our business model. We go deploy our platform across companies and then charge them for the user fee, and then whatever transactions are doing, we make an interchange fee there.
Okay, so there are two things, two wings of revenues coming in for you.
Yes.
One is the user fee which you come which is a one time every time you onboard an user, and the second one is the interchange fee which is there. I assume that the interchange fee comes from the banks and others.
Yes.
With whom you transact. What is the kind of user fee like per customer?
So it depends, sir. Our rack rate is 249 per user per month, but depending on like how large, how big is the size of the of the company, we move anywhere between let's say 125 to 249.
So to understand this correctly, Raj, you're basically saying that every time you onboard an user, you get a rack rate of 249 or lower based on the quantum or the volume of business that comes in.
Yes.
And the recurring revenue would be the interchange fee every time the user does it, or the company which is filling the prepaid card and the user using it through interchange is the recurring revenue for you, right?
No, the recurring revenue is the SaaS fee. Okay, and which is like when the user uses the platform is the recurring fees, and the interchange is a fee when they transact, when the user goes and uses his card at any merchant, whether online or offline, the interchange which is generated post swiping the card is what is the transaction revenue. So we have a recurring fee in SaaS, and we have a transaction revenue in when a user uses his card.
So just to get an idea that if a company is filling a prepaid card and giving to an employee, and you get at that point in time the amount which is there, a one-time fee. Does every time the filling happens you get that fee?
So let me step in here. So the way we earn is, one is a recurrence through the software. The second is the recurrence every time a user spends the money that is there on the card. So let's say on a card, 10,000 rupees is loaded by a corporate. The user spends that, we earn the transaction income. Again, the corporate loads 10,000 rupees. Again, when the user spends that money online or offline, Zaggle again earns the interchange. So there is a recurring component in both both the SaaS fee, which is a predictable per user per month fee, and the transaction one is every time the user goes ahead and spends.
What would be the breakup of this two fees or revenue streams for you?
So today, what we do is a large part of our revenue comes from the transaction income. The idea is to be able to make it very reasonable for corporates to be able to come onto the platform. And when we are monetizing the transactions, we then are able to balance out what we charge in terms of the software or the SaaS fees.
Okay. And what would be that transaction fees that you get for average user? Is that again volume led, or is it a fixed charge that you get from the financing banks?
So it is basically, decided by the network. So there is no one particular fee which is, there. It depends on, where category, which category merchant it is being spent, whether it is being spent online, offline. Depending on that is the fee, which gets generated.
Give me a sense of the kind of programs that you run, Avinash, because that's where you are able to acquire. And when you say that you're going to spend 300 crores on acquisition and retention of customers, what does it mean?
So we offer expense management solutions to our corporate customers. We offer, reward point platforms. We offer vendor payment platforms. So vendor payment platform is called Zoyer. Our employee benefits and expense management platform is called Save, and our reward platform is called Propel. So the way we look at our investment in acquiring and retaining our customers is largely to ensure that we are able to engage with our users. Today, Indian consumers are expectant of some sort of gratification, incentivization for the spends that happen on the platform, and we do it in a very calibrated manner, in a very intuitive manner basis, AI-driven model engine, which is able to figure out where, if we incentivize, it's most beneficial for both our customers as well as for the company.
Give me a sense of the operations, because I was looking at your financial year numbers. You had consolidated number for FY23 and standalone for FY22. Is there a reason for that? What is the kind of additions or any new subsidy or acquisitions that you've done that had led to consolidation in FY23? And is there a comparable to that in FY22?
No, so there is actually no difference between 22 and 23. We have just incorporated a company in UK, but we will look at how to go ahead and use it in future.
Okay, so that's more of a technical nature. So what is the plan that you have for UK?
Yeah. What's that?
What is the plan that you have for UK?
So not right now. So we are looking at the geographical expansion as a whole, and in the coming quarters, we'll decide where to go and what kind of operations to build on in the overseas market.
How have you been growing your business? Give me a sense of that. How many customers you've been able to acquire, and is there a retention rate that you track that gives you a good metrics about it as well?
So one of the most important metrics that we track is our churn, and our churn is today less than 2%. And that's something that we are very focused on to ensure that we retain our corporate customers, and we look to use that to be able to grow. We constantly add corporate customers, but what's important for us is not just the mere addition of corporate customers, but how are we engaging with them? How are we deepening our penetration with those customers? How are we becoming more relevant to our corporate customers and their users? So that's what our focus is as we engage with these customers.
And if you see that, in 2020, we had, 400 corporate customers, and now today, 1896 is at the end of, FY 2022.
And, have you been able to increase the spends per corporate or every year? Means in the sense the amount of spends they're able to push through your pre-cards. Is that a metric that you track? How much has it gone up?
Absolutely. And that's the constant endeavor. Endeavor is to sell more products to the customer, okay, which is like cross-sell. And then, whatever we have sold, to see an increase in terms of spend on each of those products. So that's our endeavor, and that is a metric which we constantly track and try to see how we can improve.
Give me a sense of how cyclical is this business. Is there a cyclicality because of the spends that come in because of festive seasons or others, or is it a uniform business for you?
So there's a cyclical nature in our business. About 2/3 of our revenue comes in the second half of the year. As you rightly said, there's a festive season aspect to it, because the rewards that are given by corporates are also a function of the festive season coming in, and the redemptions also happen during the festive season. Also in the Save platform, which is our employee benefits and expense management platform, the reality that we have seen basis the data is employees tend to redeem both the points that they have, the money that they have closer to the end of the year. They also end up submitting a lot of their claims closer to the end of the year, and hence there's a clear edge to higher weightage or component there.
What is the kind of services that you offer through these prepaid cards, except aside of books, periodicals that you can buy or other stuff? Is there any other services that that can be offered that makes revenue flow much more predictable and not choppy towards the second half of the year?
So one of the things that we've done is now launched our platform called Zoyer, which is our accounts payable platform. In that line of business, we anticipate, that the revenues would be a lot more predictable. Also, if you look at the plethora of services that we offer, they encompass both in the entire expense management. So when employees go ahead and travel from point A to point B, they incur expenses, they upload their bills through the mobile app. Those bills are approved by the approver through the dashboard or the mobile app, and then the money is credited onto our prepaid card, and through that, then the user is able to go ahead, the employee is able to go ahead and spend that money. So there's the expense management, there's the vendor payments, there's the employee benefits piece which you alluded to, and then of course you have our rewards platform. The rewards platform is both for employees of companies but also channel partners of companies like Greenply, where you have channel partners who get incentivized, like dealers, distributors, sub-dealers, retailers, etc.
Give me a sense of the financials, because your EBITDA margins have been also, little under pressure in FY23. Where do you see these margins stabilizing, and what kind of margins can we expect in this business?
So this FY23, we clocked revenues of 553 crores and an EBITDA of about 49 crores. The EBITDA that you're alluding to, there's a slight dip because of the fact that we have had some ESOP costs. We issued ESOPs last year to all employees because we wanted to share the wealth, spread the happiness, and that has resulted in an investment, is how I would call it, as a ESOP cost. And also we have invested very significantly in platforms like Zoyer, our corporate credit card platform, which was recently launched. So there's a lot of investment that we've made, and that has led to a slight dip, but we anticipate in future to be able to improve on this.
What could be the industry EBITDA margins that we can expect? Just to get an idea, because you are one of your kind in business. So just to understand the business better, what kind of margins can we look at, or what should be the margins in this business?
Sir, we would want to refrain from forward-looking statements. But
okay, let me say if FY22 we had 16% margin. Are we going to go? Is that the normal margin level in this industry?
This industry is still evolving in India. If you look at it, we don't have any like-for-like peers in India. Spend management globally is a very large space, and if you look at digitizing of spends, that is a theme that is ubiquitous. You have companies who are looking to digitize their spends to increase their efficiency, reduce manpower, reduce leakage. So that's a theme. Go green. A lot of companies really love the fact that we are able to actually allow their employees to scan their bills, upload their bills digitally without having to print a form, staple it, and submit it, etc. Right. So these are themes which have a very clear secular trend upwards. And we believe that this is going to help all businesses which are in the spend management space, provided you're able to actually cater to the needs of your corporate customers and users effectively.
So just to also add to it, Sajid, if you look at in COVID, COVID was like, if the digitization theme which was there, it rapidly means rapidly, took off, and we actually call COVID the best CTO, in terms of digitization. And what it brought about was companies to tell them that if you are not digital in nature, your operations, your employees, all information flowing through them can actually become detrimental to your business. So it is extremely important for companies to remain digital in future. And the kickoff which happened, and this is the decade of digitization, is how we feel. And we think that more and more businesses will adopt the digitization theme, and hence we will be a beneficiary of that.
You come in the intersection of fintech and SaaS. So should the street look at you as a fintech company with the financials, revenues and margins which are in line with fintech, or should you be looked at as SaaS company where the margins are much higher, and then you should be valued accordingly?
My question to you would be, sir, why separate it out? Why not create another category which is a combination of best of the world?
So what should be the way to look at you, and what kind of
would
margins should we look at that fintech?
To be to be looked at as a company which is at the intersection of SaaS and fintech, be able to get the best of both.
How do you see spend management moving from here, Raj? Because a lot of that spend management is also discretionary in nature. At times of stress, these are the ones first to get cut off. How have you seen in the last 3 years? I don't want a FY 24-25 level, but you have seen how spend management has picked up since COVID. So can you give us an idea of how that spend management is there? Because you will become a proxy for consumption and discretionary spend which comes in.
Correct. So, sir, for any business to do, there have to be vendors and there have to be consumers. So as long vendors will be there, okay, as long as users will be there or consumers will be there, this is going to become overall, a criteria which is going to go more and more in future. Okay, so what I think is that it is not really discretionary in nature, to go ahead and pay to your vendors. And Zoyer, which is our platform for accounts payable, is a platform which will be used throughout the year. Okay, and it is not discretionary in nature. It is like you have to use the platform to be able to efficiently make your processes better. So what I think is that over a period of time, sir, what is even probably what is discretionary small part of our business will also become the norm in the future.
Is there do you need to constantly invest in acquisition and retention of customers in this business, Avinash? My point is that your future cash flows be used aggressively to continue to do this kind of thing, or is it at some point in time it will be a less burden on the company with respect to acquisition and retention of customers?
So let's look at it this way, right? When you are actually engaging with users and corporate customers, you want them to engage with your platform and have a sense of happiness and satisfaction that yes, this is a great platform. Because we are still a very young company, this is a very young space. You want every user to be a spokesperson for your business. You want them to go out there and tell their peers, their employer, anybody who's willing to listen, to say, hey, this is a great solution and this is actually making my life better, right? And in that effect, if there are certain users who are for whatever reason habituated to be nudged initially to start using on the platform, then there is a certain incentivization that we need to make to retain them. As we keep growing, we will keep adding newer users. And what we track is to make sure that are we changing the behavior of these users, that the first time, second time, third time you're giving incentives, and is it coming down? And by maybe the fourth or fifth time, you stop incentivizing that user, and that becomes a habit. So I'll give you a parallel. If you look at Zomato or Swiggy or any of these platforms, when they started off, all the delivery was free, and today they're able to charge a convenience fee, and all consumers are happily paying that fee. In fact, now they're charging a platform fee of 2 rupees or whatever, right? 3 rupees. And even that is something which users see, because there is real value in the convenience. There is real value in the platform itself. But for that value to be discovered, there was a certain investment that those companies had to make. Mind you, those are B2C companies. We are a B2B2C company, so our investment is significantly lower. Much lower, but we still need to operate in the same world, in the same environment that all these companies are operating, and we're dealing with the same set of humans ultimately.
My question was that is it fair to compare your model with a Sodexo?
So, one part of our business probably you can compare. We have, like, as you said, that there were 5 parts. I think one part competes or, is similar to Sodexo, but the rest of the 4 parts are completely different.
And will that, if there's so much of, returns coming in this business, is this model scalable? And can there be other competitors that can come into this business very quickly?
Sir, I think it is a beautiful business. It is a, EBITDA accretive, high margin business. Okay. And what we see
You
is
said
that,
high margin, but you're not able to comment on the margin part of it.
no, so so the word high itself, shows that there is, decent margin. And, looking at us, what we see is that the market, is the TAM is so huge that it will be able to absorb multiple Zaggles. So there could be some people, who through this interview, will get motivated and would want to, start a business like ours, and we would wish them all the best.
Gentlemen, it was a pleasure talking to you today. The Zaggle Prepaid Ocean IPO opens on September 14th, price between 156 to 164. The company is raising 563 crores, which includes a fresh issue of 392 crores, and company is valued at roughly 1650 crores at the upper end of the price band. Thank you for watching IPO Adda.